Friday, November 10th, market analysis, Stan Ehrlich. And I start out with stock market indexes as usual. And then I go to futures. And sometimes I cover sectors, forex, crypto, and cyclical analysis. But this morning, we got stopped out of some brand new sell signals yesterday. A little disappointing, but we know that the trading system works very well on a longer term basis. You cannot judge on one particular trade. Yesterday, we had several outside down days, a bearish engulfing candlestick, and in most cases, we had overbought conditions, therefore, a combination I love. Didn't work this time. Occasionally, these signals are part of the topping out or bottoming out process and not necessarily the exact top day, which is what we got on July 27th or last October 13th, for example. The October low last year was a gigantic bullish engulfing that worked stupendously well. It was the bottom of the bear market and the beginning of this bull market. All right, enough of the apologies. So we're about to make it, looks like, a higher high than yesterday's high, which was a bearish engulfing on the December E-mini, which is not red because it just didn't quite get overbought enough. So there's no signal and no errors or anything for the Christmas December E-mini, but the S&P 500 did barely get overbought and at an area of resistance. So there was a combination that I love a lot. Now we are still at this area of resistance that has not been broken yet or broken out of to the upside yet, but we're very, very close. We're right there right now. And it has closed an old gap already, so there's no reason to be going up more unless this bull market just doesn't want to stop, and it might be that. The October lows can be extremely powerful, and we have seen, I think it was 9 or 8 days in a row of higher closes and higher highs. And yesterday was the first sign that the market was possibly going to start coming down and close some gaps. Like I expected, I thought so, and I said so, but I am wrong at the moment. We still may be topping out. It depends upon how the market acts, obviously. And if we start to slam dunk to the downside before the close today, I'll be back in business. Maybe even another red bearish engulfing, which could happen, but it doesn't look like it's gonna. Right now, I'm just sitting and waiting on the sidelines momentarily. So the spider has been very, very strong. We could be closing on a very strong note and be blasting off for another move all the way up to something like 452. Now, that would not surprise me. I do expect it, but I thought we were going to have a downside correction first. There are 3 gaps to close. You can't ignore that. And my expectation, which is not totally demoralized, is at 423 3/4 for the closure of that middle gap. Then up. But right now, it looks like forget the downside correction and it's just up. Next chart, spider. Here's my entry this morning on the new short, and we're stopped out of the trade at the moment. So we did lose approximately 3 points or so, maybe a hair less. And standing aside, that's an automated trading system, not right 100% of the time. Don't let anybody tell you that they are or can be. That's just plain not right. And this one was a bad trade. So be it. Back to the grindstone. Next one. We had a bearish engulfing in the QQQs. Didn't work. And it is a new high and a possible new high close. The Qs are the strongest at this point of the whole group. You have to realize this is a new high now in the Qs since September 14th. And it is not very far away at all from the highest high ever since August If we can get over, let's call it 381, and we're 76.5 now, so close. I am bullish, very bullish, but I thought we were going to have a correction first, period. Now it doesn't look that way. Now it looks like that market is going to stay strong and pop up some more and get even more overbought than what we had yesterday. Next chart is NASDAQ futures, like the QQQ. It does have an outside down day. I'm going to pause for just a moment. Okay, sorry about that. So the bearish engulfing didn't work, and we had three signals: Qs, NASDAQ futures, and the spider, SPY. All of them have been stopped out this morning, and I'm waiting for evidence that we're going to see more of a correction. I can't help but say that we are in or extremely close to overbought conditions. So even though there may be a little bit more of a rally, we're probably going to have a correction that will bring us back down to today's lows or even below it, or yesterday's lows and below it. And those gaps are not to be ignored. Now, the DIA did not have a bearish engulfing, and it did come down and close the highest gap almost. Super close. Good enough. So I consider the highest gap closed on the DIA, and it just started to rally, but it hasn't made a new high quite yet. Very close. Could do it in very few minutes. Next chart is going to be the Russell 2000, which has come down and not only closed its first gap, but also a little bit of the second and lowest of the two. And that leads me to still believe that there's going to be some sort of a retracement down to finish closing this gap, potentially. I don't expect new lows. This is an incredibly profound multi-year support level, going back actually 3 years or even more. And it bounced off of it like crazy a couple of weeks ago for the October low. So I'm bullish, but is there going to be a little bit more of a dip below yesterday and today's lows or not, is the question. A little tough on me at the moment. We'll see what happens. Now let's go to that October low chart real quick. You can see that I was a little bit late timing wise, a couple of weeks or a little less, and extremely close price wise. My objective on the downside was 406 to 7.5, and we got down to 9.21, was it? Yep, 409.21. Here is a new high and a possible new high close since the October lows, and it disregarded completely yesterday's bearish engulfing, which looked very optimistic at the time. Okay, futures. We're going to be going to the first chart, and I want to start at my usual spot. Sorry about that. And it'll be the E-mini, which again did not quite have a bearish engulfing. ER sell signal. Close. So no error here. And it's very, very close to making a higher high, which I think it has, because this is a little bit of delayed data. I believe it's 10 minutes. So next chart is the NASDAQ. Oh, it's the 10-year notes. Sorry. A little out of sequence. 10-year notes, we got a buy signal at the bottom of the market. 2 days later, we're in an ER3 trade, losing a little money the first day, but every single day since then, on a closing basis, we've had a profit. We are stopped out almost, but not yet. Our yellow STS moves with the market. It's not a dollar risk or a percentage risk. It's a combination of indicators that cause the trailing stop to move. So we're still in the long trade. We don't get out of a long position just because we get a sell signal. We need to get stopped out. Then we pay attention to new signals. So we're still long. We'll see what happens. The crude oil starting to bounce, was oversold, didn't quite get to support. I definitely expect to see this market rally a little bit more to get out of its oversold condition a little bit better, maybe up to 79.80, and then turn down to new lows. Next chart, natural gas at support and drop below it, but an oversold condition, very, very close to previous lows in June, May and June. So I'm expecting it to rally. The first stopping point on the rally could very easily be exactly today's high already, and that's the beginning of resistance. But into this resistance area and maybe to close that gap. Gaps are almost always closed. Probably I have to say 90+% of gaps are closed. It may take a while, usually not very long. In fact, gaps are usually closed within a few weeks or a little less. Sometimes it takes months or more, but usually it's fairly quickly. Next chart, heating oil. We have a bullish engulfing buy signal in heating oil at a support line today. Now, yesterday's commentary, I remember we were flirting with a breakout of this head and shoulder top formation, which is still there. And just because we get a bullish engulfing at the neckline, which is support, doesn't mean the pattern is going to be ruined. Although this could be the beginning of that, but not yet. We really need to go sideways for a few weeks or go up above 3.04 in order to throw the whole pattern off kilter, lopsided. But I have now added the last shoulder high and the inner shoulder high, the head of the formation at the top here, and then the two shoulders on the left-hand side. So this is, so far, a double shoulder, head and shoulder top. And that's a legitimate formation. You just don't see too many of them. So what we've got to do here is start to break below the neckline on a closing basis. And that red dashed line is the neckline, slightly downward slanted. Then we'll have a downside objective starting, and we have an objective of 2.13-ish. So the objective is not kicking in yet. We're going to get a little rally first because of this bullish engulfing if it stays higher than yesterday's close. And we'll see how high it can carry. Probably, I'm going to think of 2.8 and then back down again if the pattern's still good. Next chart, gold. Dropping off quickly. We got a sell signal at the top of the rally. We had a buy signal at the bottom of the break. At the bottom, we got green. At the top, we got red. Precious metals has been great this year to us. We got a buy signal at the bottom there, and a buy signal at the bottom there, and a sell signal at the top there. So we're getting close to oversold. I kind of expect it to drop down some more. I'm not quite sure how far, but there's that gap. So there's definitely the possibility of 1,850 to close that gap. I can't rule it out. It's probably going to have a rally somewhere along the line in the process of getting down to the gap closure if it can do it, because we're already pretty close to oversold, and I really doubt that it's going to drop straight down and close the gap. It'll drop down some more, get oversold, bounce around a little bit, and then go down some more. Next, silver. Pretty much the same kind of commentary, not quite as close to oversold, but we have new lows. We had a sell signal as part of the topping out process, unfortunately not the highest high. That's a great sell signal. That's a great buy. Sell, buy, sell, 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 all of them on important highs, terribly important low. Great signals this year in silver. Next chart, platinum. Oversold now in new low ground completely. So now we're starting to see the continuation of the longer term lower highs and lower lows since about April. We got a great buy there, a fantastic sell there, an excellent buy there, another excellent buy. I think we could get another excellent buy in the next few days. This is not a place to go short. It is a long-term downside breakout, and we may see a little bit more weakness for a day or two. But I think it's way too risky to be going short, and I'm looking for buy signals for the beginning of a short-term rally in a longer-term bear trend. And hey, we could come down to this support area here. Sorry, didn't drag it over to the right. And there we go, right there. So that's definitely a likely, area for it to stop dropping. Yeah, that's it. So anytime 829 and 3/4 down to about 812, 13 or so. Next chart, high grade copper. Looks like the other metals is going to make a new low. We're not that close to oversold yet. Yeah, I think it's going to hit new lows. That was a great signal on top there. Great signal buy over here and here. And a little bit of a buy that worked out for a few days here. You have to realize every time you see green, we buy it with an ER1 trade the day the green happens. But we get an ER3 trade if within a few days after the red or green signal, the market retraces to our little green dots or our little red dots. So ER3 doesn't always catch. We don't always get into the ER3 trades, but every time you see red or green, we're long or short for some sort of a move, right or wrong. Next. Here's a good example. We have a buy signal on the bottom. ER1 caught the trade. This is soybeans, and we just got stopped out yesterday with a darn good trade. We're slightly higher this morning at the moment with a doji, so we may be bouncing back up. The downside move was back to a little bit of support, still friendly on soybeans. Next, bean oil. We were short from the second high of a double top with an ER red sell signal smack dab on top. Great trade. That was way back in August 21, and we are still short. This little rally is coming very close to a profit-taking buy stop that, as you can see, the yellow trailing stop keeps coming down. Now, that's not, again, a finite, non-flexible amount like X number of dollars or pennies from the lowest low, for example, or a percentage risk from closing prices or lows or highs, that kind of thing. This is the combination of indicators. Next, meal. Sideways, doji, bouncing off of support fairly well, not super accurate, but managing so far to close at the top of the support area, a hair above it. So we may do that again today. I think this is going to rally some more. I don't see any major indication that it topped out on Wednesday. Not yet. Next chart. Bad buy signal a few days ago in corn, and now another new low. And I have been saying for weeks and months that corn is going to go by this, do the same thing that wheat's been doing. And it is. So rallies have hit resistance areas and turned down to new lows, despite a buy signal that didn't work. I'm looking for lower levels. These are new lows for quite a long period of time. This is a new low, in fact, today since February of 22. Year and 3/4, quite a substantial amount of time. Wheat. And corn. What can I expect on the downside? Actually, not too far away. 455 looks like a very good price level for a potential rally. I don't know if it's going to start a bull trend, but that would be a good spot for it to bounce off of, maybe a pretty good amount. I'm thinking 20, 30, maybe 50 cents worth. Next chart is wheat. New lows for the trend back in August, rallied back up to resistance, made new lows, rallied back up to resistance, attempted to make, not quite new lows, a rally to a slightly lower rally high, and now starting to come back down again. looking for more sideways to lower and new lows soon trending. Next is live cattle. Oversold and very close to the price level of about 171.5, where it could start to bounce, but we're not quite there. We need to get there pretty quickly, like today or Monday or something, and stay oversold, and then it's going to bounce. Anytime it's going to be ready to bounce here because of its oversold condition. But the price level, I think, is going to be 171.75-ish. Next chart. We were long from almost the bottom of the move on live hogs. We got stopped out a couple of days ago, and now the market is trying to move back up again. We got an outside up day today, a bullish engulfing, back up to resistance, which stopped the rally at today's high so far. But we could start to work our way a little higher here because of this bullish engulfing, and we're nowhere near overbought or oversold for that matter. So I have to go with the bullish engulfing. The trend short term, only for the last few weeks, is obviously up. We did get a buy signal at the bottom. That was great. So I'm looking for a little bit more strength, but it really needs a breakout on a closing basis above 73.5 in order to look a lot more friendly. So you're kind of between a rock and a hard spot at the moment. Next, OJ. As you know, I screamed bloody murder when this market had a gigantic bearish engulfing ER sell signal, and that was on October 31st. Down hard the next day, and even harder the next day and the next day. But we got oversold. We're bouncing out of that, and finally, we just closed today a gap. I mentioned that gaps are almost always closed, and here it is, it's closed. So is that the end of this rally? Yeah, it just might be. We're not oversold or overbought one way or the other, but the resistance area and the gap closure is a classic spot for a market to start turning the other way. So watch carefully to see if this thing starts turning down. Next chart. Very, very overbought and staying that way unbelievably. It looks like a little like orange juice recently in cocoa. And I expect this to reverse and have a bearish engulfing red ER sell signal soon, very soon. It's not happening yet, so you just have to wait. I do not ever recommend being a buyer when the market is yellow on the way up. It just usually is very close to a top, not in this particular case. We got a great sell signal over here, lasted about a week and dropped off a really large amount extremely fast. Wouldn't be surprised to see that happen again. Next, almost a bearish engulfing, not quite. It wouldn't have been a bearish red ER sell signal because we didn't get overbought recently or today. So all I can look for at the moment is a little bit of a dip down to 167.70-ish, and then maybe it's going to turn back up again on coffee. Next chart is sugar to sweet, inside day, doji, very close to the minor lows on Wednesday and Thursday, and so far today. It could dribble off a little more, but what's the trend? The trend is your friend, and it is definitely up. Bull trend line has been holding very well. Support level is just a little bit lower, not too much. And I think the market is likely to hold and turn back up to make new highs, maybe even next week. Caught in the rag, got oversold, dropped below support, but I mentioned it being very, very close to old lows. And here we are, turning back up again. So I think it's going to rally up to and through this support area, red zone, and maybe even get back up to 88 or something. Not surprised. I wouldn't be surprised. And then we have NASDAQ. We are stopped out. And I think the next one's going to be the E-mini. No, this is the bond futures. It's not a sequence, but I do want to show you that the bonds are maybe trying to form a bottom formation. We did get a buy signal smack dab on the bottom. You got to love that. And ER3 got filled 2 days later. Small loss on the first day, but every day since then, this market has been profitable for the ER3 trade, and the ER1 really never had any problems, like the ER3 only for 1 day. Bullish on bonds and 10-year notes. The first stopping point for any significant amount of time should be around 119-ish, maybe 120, but very close to 120. And finally, the E-mini has made a higher high by a slight bit. And you guys have a great weekend. Thank you.